Hello, everyone, my fellow traders, dear friends. Today is Saturday, and I'm going to be doing a breakdown of EURUSD long trade that we have taken on private channel and shared on private channel. This is the exact trade with all the targets, stop loss, and entry, right? And we have already taken first partial on that trade, and many of you guys traded that with me, and I received a lot of feedbacks, and thank you for that, guys, again, once again. All right, let's start. When it comes to a breakdown of such trade, we must be going, starting from the scratch, like from beginning, as I always do, from higher time frame, because trend is your friend, guys. You need to be following and going in direction of a trend. As you remember, we even here we were looking for longs, which did happen from this level, but market failed to maintain that bullishness and broke down even lower. Then I told you about two levels. If I'm not mistaken, it was the demand level at this area we're expecting the longs from, which already did happen as well. But by the way, guys, market moves in a fashion of supply and demand. Like what I mean by that is it's moving from demand when price is cheap, there's a demand on that price on certain asset. When it goes to higher prices, people no longer want to be involved in that market. They don't want to be buying at that price. So that's your supply area. So it's bouncing between supply and demand until it finds balance or imbalance. If there's no balance, price tend to break either to the upside or downside, and that's the balance, fair value of the price, exactly at the middle. This is the theory, right? Why did I tell you about that? The reason is, look, there's a demand zone, right? And where the people are interested in buying the asset. In our example, it's USD, and at that higher price, there's a demand level. If I take it the entire zone, that's a supply. So people no longer want to be involved in higher prices and buying at that level. So they are shorting, right? They're selling their euros for dollars. And at that price, when it comes to the demand, there is a demand on euro at that price. For that reason, it goes higher. All right, we have our zone. That's the area in between supply and demand that euro is bouncing. Like that's a ping pong game. But still, if we go from weekly to daily, 4 hours, market still bullish. And easiest way to determine the direction of the market, direction of the trend is if it's above the 20 EMA, which is the red one here, market is bullish. That's the simplest way. I don't say that it's the best way or it's the correct way, but it's the simplest way. If it's above, yeah, it's buyable, longable. If it's going below that 20 EMA, it means that either market is shifting the trend, direction of a trend, or undergoing an accumulation until it finds the power to push up, right? So at that level, look, every time it breaks down 20 EMA, there's a tiny bit of accumulation. Longs and shorts being taken here, bulls and bears are fighting, and whoever wins that fight, market moves in that direction. That's the simplest way of explaining the Wyckoff theory for you all. Same happens here, below 20 EMA, and look at the point that it crosses 20 EMA to the upside. It finds the strength, another accumulation, boom, goes up. Same goes here, but at that level, it goes higher, another accumulation, but breaks down, turns to be a distribution, and market goes down. So this is the theory of the market. Every box you see is either accumulation or distribution, but once we see that move happened, we can tell that it's uh, accumulation or distribution. Before that, it's just Most of the time it's guessing if you are not working with the volume, but that's deeper. I don't want to be confusing you much, but let's go to recent price and break down why exactly at that level. So first of all, it was important for me to see market reacting from this level of demand in a positive way, in a trend direction way. And we have seen that market reacted. That's a bit of accumulation here, like one, two, three, four candles of sticking in that level on that level here. Once we see price reaching above that level, that's a sign that there is enough power to push market higher from this level. It means even here we could have taken some trades, but until supply zone from higher time frame, we did not take this trade. When it came back to this level, back to the accumulation level here, I was looking for confirmations. My first confirmation is, and again, it's reacting from a demand zone created in the accumulation. So if I can do a schematic for you of this price action, market was coming down, reacted from certain level, went up, coming back to that level, and we are taking our trade exactly at this point on lower time frame, on 1 hour, something like this. And that's our created, newly created demand zone, this one, testing that level, giving a positive sign from that level, coming back to that level, and we've taken that trade. Same schematic happening on lower time frame. If you can already see at that point, lower low, lower high, lower low, lower high, and we're taking that trade. I'll do another drawing here so you can differentiate. Boom, boom, boom. And we've taken that trade here. Exactly. Let's do it a different color, shall we? Okay. Imagine that the red one is a lower time frame and they're looking the same, right? Just a smaller version of the bigger one, bigger schematic. Time frames are fractal. Everything is happening the same way on different time frames, but either faster or slower. So whatever happens on 4 hour will happen on 5 minutes, even seconds time frame. That's the reason why I sometimes check seconds time frame, even though I don't trade them, but I do experiments on them. So that's again under theory and schematics. If I go lower to this level, we saw the reaction closure above this level. It's a tiny accumulation level. We can go to lower time frame to see what's happening, why this reaction came, and can we take a trade when it comes back to that level. So I'll do a replay mode for you so you'll understand my thought process. So at that time, before I've taken that trade, it was looking like this. I was already happy with what's going on in the market. That's a reaction above 20 EMA, breaking above the structure. So I used Fibonacci for that, from impulse low to the impulse high. And as you can see, there's a 0.7 of Fibonacci, which is optimal trade entry on ICT. Or that's just a golden zone, let's say, between, let's say, exact middle of 618 and 786 of Fibonacci. Yeah, that's exactly this. Yeah, that's the zone of entry. But the middle of it is where we have taken that trade. So when it comes back, we already have set our limit order here. When it comes back to our level, we take that trade, right? We've taken that trade. This one. It's already set and it goes. At this point, when it comes to management, at this point, after this breakout, it's already risk free, right? If you don't want to be risk free, if you want to give some room for your trade, you can move your stop loss to this low to secure some, um, not secure some, but to reduce your risk. It's very important, guys. Instead of um, thinking about making more money, you need to be preserving as much as you can at the early stages. I mean, not on only on early stages, but it's always applicable. But it's very important. Uh, First comes capital preservation, then it comes capital growth. It's every professional trader knows that, and you must also know that. So, like, I do it aggressively. I move my stop loss to entry level, immediately making that trade risk free at this breakout, at this point. When it breaks that high, when it breaks this high, I'm telling you about my management. Can be different for everyone else, any trader. So at this point, this is a very strong candle, guys. Extremely strong candle with high volume. Look, I don't even have to look at the charts to see that volume. Volume going crazy above average, like, I don't know, like entire week we did not have that volume. This is Tuesday candle, and this candle even candle's volume even higher than that. So this is the first candle that we have such volume. Of course, we had news. It was CPI, but anyway, it means that if I can move my stop loss to this candle low or a bit more conservative to this low, that'll be a correct management, because if market comes and does this, don't expect it to return and go higher. I'm happy to take that stop loss, as well as after partially, we've taken some profits here already. So we need to be securing more, putting a stop loss at this low at least to not risk on our capital, which is most important thing. So the rest is just history. We're going to see how it performs. I I'm expecting another accumulation here. It can be below 20, above 20, but the direction probably going to be higher. And the target we are taking is on higher time frame, is at this supply or above it. It can go easily to this level. That can be an easy target, but we happy with 1, 2, 4 here, right? That's our plan. Everything will be updated. Everything will be shared on the private channel as always, on how we manage, how we take partials, so we can follow along. That's not going to be a problem for you. I'll keep you updated. But this is just an educational video. It's not uh, similar to other videos I'm sharing with you. The purpose here is to show you the reasoning and why we take this trade, and maybe some of you want to learn. If you have any questions, you feel free to ask. I'm always happy to answer. And yeah, pretty much. I'm thinking of a way of, if what if we had different entry model here? Would it increase our risk to reward ratio or not? Let me check for you. Like, there's gonna be also educational part of this video, a bit experimental. I can take few. Let's actually do it on different. I'm not gonna be deleting anything here. Your ESD, another chart. Let's see, should be clean here. Yeah. So I'll be taking another entry method here on lower time frame. If Just one, this is interesting for me, maybe for you as well. Let's see if uh, there is potential for other methods or other entry criterias here. So all I'm waiting on 30 minutes is just the creation of another demand, right? Closure above this. Let's see. Okay, closure above our zone is completed. We have another demand zone. I might take few stop losses. This is a bit scalp day trading style entry. Um, but yeah, it's it makes me great returns. So why not? I'm gonna be doing it quickly. I see another nice impulse accumulation level completed, and that's a nice. It's looking nice. It might be a breakout of that high. I'm gonna be risking one trade here. Again, it can be a stop loss, but this is how I trade. Let's do it. One, two, two. It's more than enough. Let's see. That's a trade tap. We are in on that trade. Let's see what happens. Okay. If I see that candle on such breakout trade, I'm immediately moving my stop loss to uh, either to this candle low or straight to break even. You don't have to risk your capital. If it comes back, it means that it absorbed all the buyers here. Sellers absorbed all of them and it will come back and stop you out. You will get another chance to re-enter here, like 100%. No worries. Don't worry to miss out. Don't have a FOMO. That doesn't help. Like you need to reduce your emotional um, human factor, to be able to be a profitable trader. So we move our stop loss here. Perfect. No emotions. We're free and good to go. Whatever happened next is just our statistics and the rest, right? Okay, nice candle. You know, we can do this. Move stop loss to below that candle. Or if you see a market making accumulation or any kind of consolidation next to 20 MA, it means that it's if it coming closer to 20 MA, it's either gonna consolidate for a while or do a deeper correction or even reversal. So sometimes I have that management rule as well. If it crosses 20 EMA, it didn't, just evicted. I close half of the position. Okay, that's a that's a break-even trade for me. Yeah, I made zero on that trade, right? That's a break-even. Now, let's see if we have held that trade, what would have happened? Okay, it's moving, moving. Yeah, it's building some strength as I was expecting. It's doing a accumulation here. If I see a breakout from that box, I will be happy to take another entry. Okay, it's breaking out slowly, but I don't like how it's moving. It's too impulsive, I want to have such small squeeze to enter buy stop here. We don't have it. But still, I like how the market, the order flow wise moving. It's creating continuous demand zones and respecting them. So it's probably going to go higher. See, like demand is getting respected, moving higher. But it's too impulsive for me to enter, right? So I'm gonna be holding myself from entering. But still, like this trade, if I've not taken break even, if I did different type of management, this would have hit 2 hours and would be nice. But yeah, you cannot tell how market is gonna be performing or moving because, by the way, this is my entry again. What makes us money again is our system that we have tested multiple times uh, across the multiple data, and at the end of the day, it makes us profit, right? We need to stick to that. We shouldn't be, you know, one. in another trade that's a loss for me, for example. That's the reality. That's the transparency, guys. This is how you actually do backtesting. So it consolidates another trade I've taken here. I moved it a bit faster, but yeah, I would have taken that trade. If I see that huge candle, that's a breakout candle for me from this tiny zone. Look, I take that trade. So in total, we made two here, minus one, one, and zero. So 1 hour on that trade, 1% on that trade means that if you have risked 1% on your capital, you could have made 1% profit. Yeah, this is how trading actually works, guys. It's not like you enter, you make profit 2 hours, 3 hours, 10 hours. It doesn't work like that. You take losses, you take break evens, you make 2 hours, you make 2%, 3%, and it just goes. And at the end of the month, year, it's um, showing you either positive or negative number. Hopefully, it's positive, and we are we are doing our best to give you positive results every single week, every single month, and hopefully end of the year as well. So you guys, if you like such videos, educational videos, stick around, support me, give good feedback if I need to change something, if I need to show you differently. But this is how I do it best. Hope you liked it and stick around for more. See you. Take care.